All right. Good morning, everybody. Want to continue to look for any headlines that may suggest we're going to come out of this shutdown. Um, Not expecting that today, but it sounds like they're going to vote on it every day. And there was a couple of defectors from each side, so who knows, right? Maybe one side or the other will come to an understanding. I think now that he's got the shutdown, that they're going to try to keep it for a while. It kind of goes to the focus of reducing government, although maybe in a bit in an extreme way. NASDAQ down 0.5% with the S&P right behind it. Less down, but still down. The Dow and then the Russell all more than 0.25%. But we also have Hong Kong down. I believe they're closed all day today. Then we had Japan. They're going to get data tonight, so you're going to want to watch that data if you're trading in the after hours this evening. And then Europe is in the green, close to 0.75% or 0.5%, depending on if you want the UK or Europe. We are going to get manufacturing PMIs today and ADP employment. Like I said, Monday, this is jobs week. Every day this week, we're going to get employment data. These numbers are a little away from each other. So when we have a discrepancy like this between the forecast and the previous, you want to pay particular attention. That can cause people to be offside. We are going to get crude oil inventories today. That's a Wednesday thing. Get them every Wednesday unless it's a short week. With what was going on yesterday with the news, keep your eye on crude, right? Let's see if the government wants to do anything with their strategic stockpiles and just see what kind of news we get. The numbers don't seem radical at this point, but this is one that gets slept on quite a bit, because we'll go long periods of time where it just doesn't impact us. And so we quit paying attention to it. And then, surprise. As I mentioned, Japan tonight is going to have data, foreign bond investment info. So at 8:15, which is a little odd, normally we get them, at 8:30 or at 10 o'clock. This one's going to be on one of those quarter hours. It's also right around the time that we get dollar and treasuries open, right? Because those don't open at 9:30, they open early. Oh, I missed that. Overnight tonight, we're going to get the 10-year bond from Japan tonight. That snuck past me. Yeah, it looks like they're at a 90% certainty for a rate cut, and at least a 70% chance of one more beyond that one by the end of the year. So 2 rate cuts by the end of the year. 2 more. Seems a bit much. Well, if China is gone, and I believe they were not participating last night, we sure got a lot of volume anyways. Looking at 116,000 in the overnight, we had a really nice move through the kill zone, the drop down and the reversal back up, closed the liquidity gap. Nice play. we're testing the 3-period daily moving average with a lot of volume behind it. This is a little high for the mornings. Generally, we see between 45 and 65 is kind of the norm. Getting into the 70s isn't bad. 117 really suggests they're coming in and getting it done. And it's surprising because if China's markets were closed, then they're getting it done even without that, right? Like, I don't know how much of their trading attributes for the overnight volume, but it's a pretty big number this morning. If you look at the daily, we do not yet know if this is a lower high, right? I know it may seem like it, but the red bar is not done yet. That's today. And since the current candle's bar isn't done, we don't know that this is a lower high. For all we know, this bar is going to rally up and close today up here, and then this would not be a lower high. That would just be, a pause, like that was a pause. It wouldn't have the connotation that it appears to have with this red bar. Even if the bar does close red, if it closes the way we are right now, it's still not a lower high. We would need to see what the next bar does and see if we continue to go lower, or if the next bar goes up and breaks, or if we just stay further in the range and make another bar here and maybe another bar here, right? So at this point, it's still not a lower high. That's the main takeaway. We're holding above the 20. We haven't even got there. That's the green line. We're holding above the 10. We tagged it, cut underneath it, and came back up. That's the blue line. And we're dancing with the 3, which is that white line right there. It's also where we have the volatility trigger. The call and put wall did not move. That's why I didn't share a picture of the call and the put wall lines, because they're in the same spot they were yesterday. So we're still in this hurry up and wait mode where we are sideways within this range. We're holding above the midpoint. Which is basically the 10-period moving average. And that is the break point. If we get below that, we aim for the 20, and then we aim for the low down here, 66.24, and try to get a low that's lower than this. Now, I like shorting from the high. So, finding an intraday signal that can get us in across these highs to go short, I would like that a lot better. But we're not going to see that on this daily. I don't like shorting from the hole if I can help it. All right, we got a phrase that says, if we get to one side of the ADR early enough, we can go to the other ADR by the end of the day. We got there really early. The problem is that phrase is a representation of when price gets there and bounces and goes, we can get to the other side by the end of the day. That's not what we did. We completely broke underneath it. Now, I will add to that generally speaking, if you get beyond the ADR, that's usually a wrap right there. And so if we actually reverse that and get back above that ADR, now going here is more likely. Just because we did recover that ADR, right? So can kind of put the two pieces together. If we get to one side early enough, we can get to the other side by the end of the day. And if we break through the ADR, but we end up recovering and getting back inside, we can get to the other side by the end of the day. Put those two together, 67.50 is on the table today. That's not bullish. I want to really highlight that. It's not bullish to go up to 67.50 and hit that today. It's just wave function, right? It's what price does. It's the movement of price action in the ebb and the flow, the way that it moves, right? See how it moves. That's all we're talking about. It's just a narrower movement than what we see here, but it's the same thing. So if we run up and get into 67.50, it would be up here somewhere, and that by itself is not going to be bullish. We can put it into the higher context and look again at that daily and kind of consider what it would mean, to get a 67.50 up here. That would complete this sort of a scoop pattern, but we would still be inside the range and we would be underneath the critical level. So I still wouldn't see 67.50 as bullish because we would need to get through this zone. We don't know how much more liquidity there is to work through up there, if those sellers are done or not, if there was even sellers up there. Maybe we just had buyers that got exhausted. There's a lot left to it. So just getting an inside day breakout of yesterday's high and tagging 67.50 or the upper ADR half does not make me consider this bullish. Keep in mind that we're likely to get a liquidity gap at 8:30. Liquidity gaps are where you get a really big candle. There is no gap in price. It's just a term or a phrase that we use. They can happen anywhere. Put it on a 5-minute. Generally speaking, you get these liquidity gaps at 8:30 when we have a known event like CPI, PPI, non-farm payrolls, something like that, but they can happen anywhere. We had one last night in the kill zone. But if you know when lightning's going to strike, you can run a DeLorean through it or something. So the idea is we want to target these economic events where we could get liquidity gaps simply because we know when the liquidity gap might show up. If we do get one of those candles, you can trade it using the liquidity gap strategy, or you can just measure it and use it for the intraday zone. So this is what a liquidity gap looks like. That's an 8:30 print. I don't know which one it was because it doesn't even matter, but that was August 12th. So at 8:30, we had news that shot us all the way up here. We did not close the gap this day. If we had, we would have come down to 8:30 where we started. But if we measured everything that happened from the time that that event took place to where it finally dried up, that half back became really important. If we just wanted to measure that one single candle, that also would have been really important. So now that you have that one single bar, you can plot higher and lower from that bar. Mark out 50% and 100%. And you can use that into the intraday range. So the first touch, when price got up there, it rejected right there. Once we finally got through it, we ended up doing a Busby on it. The next time we paused, right next to a red candle right there, paused at 200, and then we got above that. You can go back and study those candles, right? You can always just, today it'll be 8:15, but I was using this 8:30 example. You can go back and Google when was CPI for 2022, 2023, 2024. Mark every one of those and evaluate them, because that's what I did. I learned about how these candles form, what kind of trading opportunities we could get, because I went back to every single one of those dates over the last few years and I examined, hey, what did price do on that day? And I started to have a better understanding of the sort of behavior we could get. And then, of course, you start to recognize patterns and opportunities to trade it. If you haven't seen it or you haven't studied it, how do you have any clue what the heck we're supposed to get, right? You don't know what it looks like. So if you're going to day trade, you might want to figure out what that looks like if you're going to try to trade it. So at 8:15 today, we're going to get that data, but we got a lot of data coming in today. And then we've got the gotcha headlines that could come in at any time because we're all waiting on this government shutdown to end. Any rumor or hint or anything like that, and I'm sure we're going to get a couple of fake ones, that's going to, really move the market. And then, of course, it's going to be, oh, well, no, 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 never mind. That was fake or that was a false start. That was not true. And then the market will unwind it. All right. I'm nearly positive we're going to see at least one fake out on that. It's going to be that kind of week, I think. And for all we know, it's going to last the quarter. All right, we made it back above the weekly pivot. That's a really good thing. Structurally speaking, we're bullish above the weekly pivot, bearish below. We've got today's floor pivot overhead. We've already been there once, so it's not a missed daily pivot. Right now, it is the focus. We want to get there, get beyond it, try to go even higher. It's worth considering, did we get to the S1 yet? Because there is an S1 R2 trade. Wow, we got to S1 plus some, which is a little weird because we didn't get to S2. We just overshot S1 and then finally came back in and got above it. Still, if S1, then R2, that is on the table. We don't have any reason to think we're going to get that trade today, but we are back above S1. That is step one. Get to the floor pivot, get above it. That'd be step two. Get your inside day breakout, which gets you through R1, step three, and then into R2. Level by level, right? Nothing changes. It's the same system, the same approach, the same strategy, same concept that we use every single day because it works. I gotta eat, pay the mortgage. That's my trade. This sloppy mess from the last week is not helping. We turned around in the shallow area. We got some work there. And we had yesterday's turnaround, but this is a shallow zone. So these reversals, this one that I marked out, this one, they didn't come from buyers stepping in and running it up. They just turned here because the sellers got exhausted. Sellers got exhausted. You can see that like there's nothing here and there's nothing here. At least from this time frame, that's what it looks like. If we were to drop down into a smaller time frame, maybe we would see, actually buyers had come in, but that's shallow. We move through shallow areas relatively quick. The reversal yesterday off of that 80 level, not too big of a surprise, but if we can't hold that, then 66.50 is on the table because we're running those 50s. We're back to 67.11 cog line. We'll have a 66.92 cog line, 66.50. We got a really nice distribution this week. A lot of work being done around that 67.11 and a narrow value area. It's not a perfect measure, but it almost seems like what we have below is what we've got on top, which is where we talk about reciprocation. Yeah, it was this one back here. We peaked out above, then we peaked out below. It's a matching set. Reciprocation. Even if we do make that run towards 67.50, look at all the work that we put in last week in that really weird price action that I had pointed out. This is unusual price action. You just don't get it very often in the S&P, and when you get it, you want to pay particular attention to it. I think that zone is going to stay relevant until we get into a new contract. right? And this contract, it lasts until December. So we're talking about next year's contract. Now, whether or not we'll be near 67.50 all the way into December remains to be seen, but that's a relevant price pattern that I'll be paying attention to as long as we're in this contract. So if we do make a run towards that level, get above 67.40, and we should start to move into that zone almost like a gravity or a magnet. Ten-day, 30-minute volume profile in TPO. It's still a mess, and we're not expecting anything really wow to show up. I mentioned that the area where it is here, we could build it out, or we could drop down into a lower area and build that out. These are not going to move anytime soon. And when it does finally move, the expectation was that it would come up here unless we dropped down and put more work in, which is what we ended up doing, right? We put more candles into this zone yesterday. And so even if we do end up here for a little bit, that 67.50, it's very likely that it doesn't stay. And for every candle we add on the right, we're taking one away on the left. I think that point of control is going to stay right where it is for a while, not moving. And there's no classic pattern here to really help us out either. So it's just a lot of noise and nastiness. All right, that 66.95 from yesterday was insightful all day yesterday. Love it when a plan comes together, but we're done with that. So we're taking it off. We don't have a new VPOC from yesterday because we've already cut through that level in both directions. We're trying to run back up like a liquidity gap, really is what it really seems to be wanting to do. Now, that's an example of buyers coming in on the lows rather than sellers just getting exhausted. See these reversals yesterday with little volume. Sellers just got exhausted. It's not like we had big buyers step in and flip it and run it back up. This morning, sure, down at the absolute lowest level, there's not a big buying, but there is buying down along this structure, which is where price was hiding under the 786. Then we finally got the breakout and away we went. This is my failed flag play. I love that. Good to see it. I haven't seen a lot of them lately. A bear flag is supposed to continue lower. We call it a failed flag because it didn't continue lower. It broke above the 786 and ran back in the other direction. It ends up forming like a cup, and then maybe you get the handle on that cup, and then you continue on to the upside. Nice. I like it. We are above the 10-day, even just slightly. So all's good there. There's nothing wrong here. Everything is fine. Same thing with the 10-week. There's just nothing to see. There's nothing wrong. No signals of warning. Everything is good. And looking at how we are sitting for the week, we're still above last Friday's close. We're still above the half of this measured range, and we're still inside of yesterday's price action. So we got nothing, right? And a whole lot of it. A whole lot of nothing. The Mag 7 up volume is down. That'll turn your head around. The Mag 7 group is also down. Mags there too. Looking at things that are up. Gold miners, nat gas, Bitcoin, uranium, those are all up. And the VIX, of course, is up. but that's it. And there's a lot in the middle of those that we didn't name. You don't want a rally day based on pot stocks, right? Or solar. I wouldn't even want a rally day based on gold and gold miners. Silver's doing better than gold this morning. And Bitcoin's doing better than all of it. So we're not going to get a breakout rally day unless we get something changing. That's something we can always check, trying to answer that question, what's moving price, right? Because the ES, the NASDAQ, they're not moving on their own. Something is moving them. That something can be 0-day flows, dollar, treasury, yields, commodities, something. At this point, if we're going to be looking for a change, we can keep your eye on the simple stuff like BMX, the just the broad options market, and the Mag 7 as a group. Keeping your eye on those would be a nice way to spot a reversal if we're going to get it. But at this point, we got nothing. Even for themes, you know, if we were looking for a good theme to play, it would be the Bitcoin space. Mara, Hut, Hive, MSTR, Coin, or these solar names. There's always some solar names to play, and gold and silver miners. So if you're stock trading, you got some opportunities. There are some thematics in play. But if you're looking at the indexes and the Mag 7 group, got nothing. Gonna need to see that come in. Starting at 8:15 is that opportunity. So what I got for you guys, be careful, be safe, watch the clock. See y'all tomorrow.